Good morning and welcome to the Camp Financial Stock Market Update. So yesterday stocks rallied back, material stocks did well, financials, healthcare, service. Actually there's a fair amount of green in every industry, it looks like, except for maybe the utilities. Consumer goods had its pockets that did well and others that did not perform well. But I want to try to keep today's video here short and sweet. So let's go ahead and take a look. So the NASDAQ up 0.43% yesterday. The Dow up 0.23% yesterday, and the S&P up 0.31% yesterday. And I think I mentioned the trade when I first was putting it in. I know I've talked about it since, if not. But I looked at Fitbit. I bought Fitbit about 2 or 3 weeks ago. It's bounced off that bottom a couple of times, right there around 12 bucks. So I bought in, like I said, a few weeks ago after it hit the bottom again for like the third time, and it had caught up to its 20-day moving average. It had caught up to its 50-day moving average, and now it's popped up above its 50-day. So now I gotta decide how much I'm gonna let it run. But at this point in time, I've got a stop loss set, so it's gonna make it a profitable trade, no matter what. So it's good, make a little bit of money. But I had bought a couple hundred shares in the low 13s. Right now it's trading at 15. So I'm hoping that maybe it can make a run up and possibly touch that 200-day moving average up there in the $19 range. That would be nice. And I'll try to hold on up until that point. So I just wanted to kind of go over that. Like I said, I think that I talked about it when I was going to purchase, that I liked it because it kept bouncing off the bottom. It's had good earnings. The one killer for that stock has been that when they announce their earnings, they don't give cheery outlook, right? That's what's pushed the stock down and down and down, is that they're not giving the cheery outlook that everybody wants to hear on Wall Street. So that's I think that's been their major pain for their stock, and why it's dropped from $53 all the way down to $12. Now we'll see if they can start to hold on. So now let's take a look at the S&P 500 yesterday. Let's look at our laggards first, as we like to do. Qorvo, Verisk, Fiserv, Biogen, and Michael Kors. Obviously the Biogen, probably a little bit of a sell-off after the big pop the day before. Michael Kors, again with the textiles, we talked about them a couple days ago, maybe yesterday even, I don't remember. The days start to run together, but no surprise that they've took that big drop down, just based on what the other stocks have done. Kors, actually, this was the day before, Kors had already dropped about 8%, and then it dropped another couple, let's see, it was down another 2.6% from the day before. So it started the day way at the bottom and rallied back to finish where it did. So Verisk, Qorvo, both of them were continued from the sell-off from the day before, as well as Fiserv. So really the only one, Biogen, was still, it was more just a profit taking from the big pop that it had taken in the last couple of days. So Now let's look at the top performers. Sorry for the yawn. Top performers yesterday: Chesapeake Energy, Newfield Exploration, AIG, Williams Companies, and Cerner Corporation. So the oil and gas bounced back after the beating they took the day before. I'd seen oil was up 4% roughly yesterday. So it makes sense. Oil and gas is bouncing back with it after all the pain that the oil, at least USO, I track the USO ETF, and it's taken a lot of pain. I mean, it was down about 12% in the last few weeks. It may even be a week. So it's nice to see these stocks rally with oil turning around. AIG definitely not on the back of theirs was not oil related, but their transcript or their conference call yesterday. So they had a pretty good call. Deutsche Bank reiterated them at a hold, but did move their price target up to $59, which basically is where AIG is trading at now. So that would make sense that they've marked it as a hold. Now let's pop back over to the Dow and take a look at that. AIG showing a forward PE of 10.5, which would make sense for the industry they're in. Alright, now we'll take a look at the Dow. Dow's worst performers: Pfizer, Merck, P&G, Johnson & Johnson, and Nike. So the first four all have a lot in common, right? But Nike's kind of the outlier, but it's a textile, it's a shoe manufacturer. We've talked about them in the last couple of days that it's a rough market for that industry right now. So top performers yesterday: JP Morgan, Goldman Sachs, Apple, Disney, and Chevron. Again, the Chevron bounce back has a lot to do with the oil price rebound, and the JP Morgan advancement. Honestly, I feel a lot of that's just based on the fact that they are the #1 bank in the world. And they made money last quarter. They got a 3% dividend. They made money last quarter with terrible interest rate environment. When interest rates do finally turn for a company like JP Morgan, their earnings should skyrocket. So pretty interesting spot for them to be in. Obviously, if earnings rocket up, and that stock price is going to go right with it. So let's take a look. There were 19 advancers in the Dow yesterday, so we're flipping back a little bullish. We'll see how today goes, and we may see some stocks take a pretty good jump. Maybe not jump, but continue to advance pretty strongly here over the next few days as we trade throughout the rest of the week. And I believe I think we have on Friday is the non-farm payroll number. I have to look at that for sure, but I believe that comes out tomorrow. So that'll give us a little more insight into where the economy's at right now. So that is it for today, guys. Take care. Send me an email, chrism@campfinancial.net, if you have any questions. You can also tweet me at cmelik on Twitter. And I'd love to get some questions in, and we'll try to address them one by one on the show here. Thanks, guys, and take care.